Okay, guys, thanks so much and welcome. This is Stefan Piscano here with ListedBy.com and the Real Estate Networking Group. And today I'm extremely excited because this is something that's a little bit high level and out of the norm for us that I know a lot of you have been requesting. We're actually going to be joined by Jason Fritton, who's the CEO and co-founder of Patch of Land. And Patch of Land, a lot of you have been familiar. We've been able to get to know these guys over the last few months as crowdfunding has really kind of taken the marketplace in the real estate sector by storm. And it's a relatively new frontier. So tonight we're going to be able to chat with Jason, who's obviously, in my mind, one of the top people in the sector, who's really going to kind of tell us what crowdfunding is, how it can benefit real estate investors in several aspects, and really some of the core things that they've been able to put in place to, in my mind, really revolutionize crowdfunding and take it into the digital age. So, Jason, thanks so much for being with us.
Yeah, absolutely. Thank you, everybody, for the opportunity to speak with you today. I'm excited to be here. And, Stefan, as always, thank you for the opportunity to be on today.
No, thanks so much. Well, and Jason, one of the things I love, and I'll just tell you with you guys, and as somebody that's been a real estate investor myself for about 16 years, and the number one thing that we always need as investors in the sector is capital. Because if we have a strategy that's working, we need to turn it over as many times in the course of the year, else we have opportunity loss, time lost, and it lowers overall return. So I love what you guys have been able to do with kind of streamlining crowdfunding and really giving investors access to capital on a long-term basis. So maybe from a high-level standpoint, could you just tell everybody who doesn't know, well, what is crowdfunding?
Sure. So I'm sure all of you have heard the idea that, or the phrase that if you've had a good idea that there's a million other people that have had it as well. Crowdfunding is the positive side of that. If you've got a good idea and you believe in something, there's a million other people that believe in it as well. And realistically, crowdfunding is just reaching out to all those people that perhaps you have never met before, have never contacted before in any way, and having them all help you make your project happen. Crowdfunding realistically is just going out online and talking about your project, talking about what you're looking to do and how you need help doing it. And then in a small individual sense, in a fractional sense, person to person, bringing in small amounts of money to help you make that project happen. In the past, that really wasn't a possibility. The SEC had put into place specific and strict prohibitions against what's called public solicitation. And most people don't realize this, but if you're trying to raise money for an investment project of any case, whether it's a real estate project or for a yogurt stand down the street, you weren't allowed to go and try and raise money with people you didn't already know publicly. It's called public solicitation. It was illegal. You're only allowed to raise money through a pre-existing network. So the actual change that allows crowdfunding to happen, allow you to go out online publicly, happened in September 23rd of 2013 here, where the SEC finally enacted Title II of the 2012 Jobs Act. And really all that allows you to do is to allow general solicitation to accredited investors only. And the definition of an accredited investor is someone that has a net worth in excess of $1 million, excluding their primary residence, or has made $200,000 a year for the past 2 years and is expecting to do so this year, or $300,000 if they're married. That's the most important part of the legislation, which is active today. As you can see here on the slide, there's other specific aspects of this legislation, like Title III and Title IV, which are still pending. Actually, just a quick heads up, Title IV was just voted on today by the SEC. It has been enacted. Oh. In fact, we just received the 400 pages of proposed rules on that. My internal legal staff here is going over that as we speak. That just happened today, but previous today, Title III and Title IV haven't been enacted yet. In fact, the word on the street is that Title III, which realistically is true crowdfunding to unaccredited investors, to everybody, is realistically dead on arrival. I've heard that Congress is going to go back and vote on some meaningful changes, and they're going to try again on that. But right now, we are able to publicly solicit for investment from accredited investors, and there's approximately 8 million accredited households out there. And we realistically only have a 1% penetration into that particular market. So there's a lot of opportunity to grow.
Well,
Sorry, go ahead.
I don't want to cut you off, but just I get a little excited with what you're talking about here. No, for people, I mean, I just, again, as an investor myself, and just so you know too, and everybody listening knows this, within our infrastructure, our mission statement, guys, is always to basically arm all the real estate investors in our network with as much high-level knowledge and resources to actually get deals done. And so that's why I'm excited about what you're talking about, because it seemed like for a while there, every time I go to these events and the meetup groups and everything else, everybody was talking about the Jobs Act, and nobody even really fully understood it. But it seemed like it was 400 years before this thing was going to pass. And so what I'm hearing,
right.
I mean, you guys really have kind of your finger on the pulse of this thing since the beginning, obviously.
Yeah, we actually, in fact, I was one of the original lobbyists working with Congress to pass the Jobs Act at the very beginning. I started this just to give you a little bit of background on myself, too, not to take us too far off track, but I was in Chicago around about 2010, and I was looking to do something with my life different from what I was already doing, and everybody wants to work with real estate. There's something that just resonates in all of us, that we want to own a piece of the planet. We want to work with homes, or a home of some kind. It really spoke to me. So I went to the auctions out in Chicago, and there were amazing opportunities. For many of you who don't know, there were huge sections of Chicago that were just wastelands in 2010. This was after the collapse. And at the auctions, there was always the same 12 guys at these auctions, and they were ignoring what was generally the fundamental backbone of real estate. The single-family residential, the small and mid-sized multifamily, and they were going after the really big opportunities, the $50 million opportunities, the $5 million opportunities, and buying those up for a fraction of what they were actually worth. And there was a property there that at the time was worth about $300,000, the appraised value, a nice neighborhood, new home, worth $300,000. Now it's probably worth $600,000. The minimum bid on it was $20 grand.
Wow.
20 grand. It was a place that I wanted to live in, and nobody touched it. Nobody touched this property. It was just beneath their notice, and the people that really wanted it didn't have the cash, didn't have the time, didn't have the experience to be able to turn that into a good investment property. It's hard, as you all know. In fact, myself, I'm a tech guy, not so much a real estate guy. But I thought, hey, if I think this is a good idea, I think this is a good opportunity. There's a million other people out there that think the same way. And I went to my attorney. And I said, this is what I want to do. I'm going to bring this to the internet, and I'm going to bring local artisans and contractors and developers and real estate agents to make this nice again, and to put a good family in there, and to make a good quality investment for the people that are partnering with me, while still helping out our communities and our neighborhoods. And my attorney said, hey, that's a great idea, but if you do it, you're going to go to jail, because at that time the Jobs Act hadn't even been voted on yet. In fact, it wasn't even being talked about at that point. So I worked to help to lobby for this. And so it's been a very, very long time in coming. It was passed in 2012, but Title II, which up until today was the only thing that's been enacted so far, it took all the way until September 23rd of 2013 just for the SEC to write those rules. And Title III now at this point looks like it will never happen from what we're actually hearing. So I guess to recap here, the Jobs Act is still the piece of legislation that makes this happen. You can take your opportunities. You can put them online. It's through a regulatory mechanism called a Regulation D Rule 506C offering, which is just a typical private placement with specific rules that you have to verify your accredited investors. But you can publicly solicit.
Jason, I got to tell you too, to be honest with you, because this is the first time I'm hearing that origin story, and that's awesome. And what I love about what you just said, and it's so cool to me that that's the way that this all came to be, is it came from a direct need that you had in the marketplace yourself, and that's the same way for, if you don't know, that's where we came from too. And I think the best ideas don't come from somebody sitting around saying, how do I make money? It comes from a need that you have, an experience you have, you solve it for yourself, and then you solve it for other people. So kudos to you that you actually had the guts to get in there and do it.
Well, thank you very much. I appreciate that. But I think we've all seen this need. I mean, I go around to all these different events and I ask real estate professionals, massively skilled, experienced, talented real estate professionals, what their biggest problem is. And it comes down to two things. Hey, you got to find the right project, right? That's a difficult thing. But beyond that, trying to get it funded can often be a nightmare. We estimate from our side that it's a $76 billion addressable annual market. That's a huge, huge market just in the single-family residential and small multifamily asset class, and it's the vast majority of it is being handled by very dark, opaque, often predatory hard money lenders or very hyper-local private money lenders as well. It can be great companies, but can be very, very unreliable, and so it can be very difficult. And that I think that the need speaks to itself. Or for itself.
Well, and that kind of leads into what I got up on the screen for our next person here that I think it's a perfect segue in that really. So what is the difference between crowdfunding as opposed to, hard money lending or any other financing opportunity?
Sure. So we generally delineate crowdfunding into two main categories, equity or debt. Right? And equity, crowd investing, crowdfunding is where your online partners, essentially, they're becoming partners with you. Your funders are coming in and they want a share of the upside. They're taking equity in your project. You don't owe them a debt. They're becoming your partners. They tend to be longer-term projects, and the result can be a bit amorphous, a bit unknown at the moment. You're working to provide a good return, but like all JV relationships, it could go up or go down, and sometimes that produces a lot of uncertainty for different funders. They really need to believe in you and to believe what your plan is for that particular investment. Versus the debt side, which we currently call peer-to-peer lending or peer-to-RE lending, where we're asking our online crowdfunders to come in and participate in a loan to the real estate professional. And those can be much more flexible simply because the terms are much more well understood. I mean, you know what the interest rate is. You know what the duration is. You know what the securing asset is and what the value of that particular thing is. So it tends to be a lot more secure. In that way, it tends to be much more scalable. It tends to be much more easy to fund. Now, that's not always true. But in many cases it can be much more easier to fund because it's just easier to wrap your brain around it. And this is really where we're seeing some of the most traction in crowdfunding right now. I'm sure a lot of you, or even most of you, heard of Lending Club. They just went out for a massive, massive multi-billion-dollar IPO. Yeah. And they just do crowdfunding or peer-to-peer lending with consumer credit. And there's a lot of other corollaries in different industries, but real estate is now catching up. And as you see by this graph here, it's catching up in a very, very big way. This is actually pretty dated here at this point, but you see between real estate development and real estate investment / other, down at the bottom, we're looking at close to double pretty much every other category on there. And oil and gas production and pipelines is pretty large because you get those huge, massive investments into a particular project. You get $50 million investments at a particular time or so on. Patch of land here, we're looking to be on pace to do $4 million in crowdfunded investments this month alone. Wow. So it's really, 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 really growing very fast. People love it. If I tell people that they have the opportunity to invest in New York or in Miami or in Indiana, where they may have a relationship with that, it speaks to them.
Well, and so, and I don't want to, but just to speak to that, I mean, and we work with a lot of the top professionals in the real estate sector and a lot of big names. But in all seriousness, Jason, when we first announced working with you guys and the opportunity and looking for borrowers in the sector, we've never gotten a more overwhelming positive response. I mean, people really have been waiting for this structure. So that's why I'm so excited that we're kind of finally diving in this format to be able to have this conversation with the base.
Great. We're always available here to answer any questions too. I know we're going to have the opportunity to answer some questions after this as well, but I always encourage people to reach out to me at any time. We're an open book here. That's one of our biggest values is transparency. So, why is crowdfunding a game changer? Why is this such a big deal? I think we hit on this a little bit earlier here, but access to funding, access to scalable, reliable funding has been a big issue. We really had a gap between big traditional financial institutions and the smaller private money lenders that tend to be very hyper-local. There's a huge amount of room between those two different institutions. You know, the big guys tend to be too restrictive. They tend to be too slow. In many cases, they're prohibited from even lending on a particular project, especially if it needs a lot of value-add work, and those are the best projects. You know, the smaller guys, while they can be great companies and be absolute experts in their particular local market, sometimes don't have the resources to be able to you know, really help a particular borrower scale. And Stephanie, if you can move to the next slide there, you know, our big advantage, really, the big, let's just go into the big disadvantage in the market itself, has just been that lack of connection between the investors and the borrowers. Now, the individual investors, they have to go through a hedge fund or, you know, an SDIRA, or they have to go through a bank, you know, through it in a depository way, and then those individual institutions will be able to provide access to the borrowers if they can source them. But there's been very little direct access. You know, the investor is looking to have a particular exposure to real estate, but maybe won't know, you know, a professional in that particular field or in that particular market or in that particular asset class. And they're looking for something that has a level of security. You know, the nice thing about real estate is at worst, you've got something there you can go throw a rock at, you know, if something goes bad. And that's not true with a lot, or I would say even most other investments. And on the other side, you've got a borrower who is looking to scale from doing maybe 5 properties a year to 50 properties a year to 500 properties a year, but they're not big enough yet to know the big hedge funds or to have a massive, you know, a multi-million-dollar line of credit yet to where they could just constantly tap. As we all know, you tend to be able to max out on mortgages at your bank, even if you're able to take the time necessary to get those mortgages after about 4 or so. You know, so the banks aren't really a good option for them.
Yeah.
So, sorry, go ahead.
Oh no, I just, you know, what I'm excited about is it's funny too. We were just talking about this on one of our educational webinars yesterday, or day before yesterday. Probably a lot of people that are on this run as well, where we talk about, as you said, with real estate being really the only investment that has the combination where you can have appreciation, monthly cash flow potentially, and inflation hedge, and then like you said, it's something that actually has a use, so you're really protected in all markets. And I know that, you know, you're covering from a broad sense what crowdfunding is and the educational side here, but what I love about you guys, and I didn't know your background in the tech sector either, but you guys have really become, well, what would you say that you're more of a facilitator for connecting those parties in? Is that really the best way to describe what you guys personally do for the sector? And talk about maybe briefly your technology aspect, because I just love what you guys do on the site and how you're able to make it just so seamless.
Yeah, no, absolutely. And that's the solution, right? That really is the fundamental service that we provide, is simply providing access between these investors. Like I said, 8 million households out there in the United States alone, not including the enormous amount of interest we're seeing from overseas, with the borrowers who need the capital. That's a value to both ends of that. You know, the investors are looking for skilled, experienced borrowers, skilled, experienced real estate professionals. The borrowers are looking for capital. And so that's where we come in. You know, we have thousands and thousands of high net worth and ultra net worth individuals signed up on the platform, as well as larger you know, traditional institutions. They kind of bring the capital firepower as well. We mix them in with the retail crowd to really you know, maximize the amount of capital we have to be able to put to work. And we take our proprietary technology that's built from scratch here to be able to, you know, effectively source, underwrite, originate, merchandise, and fund individual properties or individual projects very quickly, and to be a good, reliable resource for our borrowers. So our borrowers do have that surety of close. They have the ability to expand into a whole lot of additional properties where before they were stuck to a few because they didn't have access to capital. So crowdfunding itself is really just expanding your network. And if you look at it, most of you out there trying to get projects done in the past, you've got yourself and your friends and family that you've been able to reach out to for cash. And you maybe have some hard money lenders or private money lenders in your local areas that may have money and may not. You may have some brokers that you're looking to help you find additional funds in the local market as well. Crowdfunding is just taking it to a whole different level. We're pushing it out to millions and millions of individual people. We're pushing it out to hedge funds. We're pushing it out to private equity companies. We're even pushing it out to community banks. We have a lot of interest in that way simply because they can't see a profit in originating themselves in underwriting, but they can when they invest through us because we've already done the underwriting on our side.
Well, Jason, when I first went to your website, and I don't know if everybody gets as giddy about this stuff as I do, but as a tech and real estate guy, when I went to your website, I literally took a step back. I said, this is awesome. And anybody that hasn't seen the patchofland.com site, I don't want to plug you too much or sound like an idiot, but they really should check out the functionality because, I mean, to me, it's almost like a smorgasbord or shopping market for opportunities, regardless of whether you're an investor looking to fund loans or you're looking to have your loan funded. I mean, you guys, could you just briefly maybe take a couple of minutes and talk about how your system segregates all that?
Yeah, so that's the challenge of it. It's kind of the secret sauce on the technology side of getting this all to work together. Keep in mind that we're dealing with real estate, finance, and securities, all massively, massively regulated industries. And we're trying to mix high technology into the middle of all of that and make sure we're compliant, that we're not misusing anybody's money, that we're tracking everybody's funds appropriately, and then it's a good quality experience for everybody involved, the investors and the developers. So we operate off of a built from scratch e-commerce based platform, and we've been consistently adding basically what we call modules on top of it to make sure that we've continually added additional feature set for our investors. They can fractionalize their investment over a lot of different properties, so they can diversify. They can fund a place in New York and then fund a little place in Texas and fund a place in Southern California as well. So they've got that level of diversification, and our system is able to track all of that at the interest rate that they've invested and for the days that they've been in, and account for all of it correctly, and then pay it out as we get paid from the individual borrowers at their pro rata per diem amount. And it's more difficult probably than it sounds, because we need to make sure that we provide a good level of transparency with all the due diligence information, the BPOs and the appraisals and the school system reports, the construction budgets and everything. Those all need to be available. And to individual borrowers, they need to be reviewable in a very easy way. The legal documents that are signed need to be docu-signed digitally so they can do it from their couch and their pajamas if they want to. So there's a lot that really goes into it. That's where we provide our service. I've got a very, very strong tech team here, brilliant people, and they've been doing a really great job to make that work.
Well, and that's been, and I don't even know, that's been our mission statement too with Listed By, is anything that moves the real estate process into the digital age and can take that process as much online and make it as seamless as possible is something that we're all ecstatic about over here. You make me think about, so who is your typical borrower and what's the underwriting process, right? Maybe we can dive in on that a little bit.
Sure. So it's very important to us that while we're providing access, we're also providing responsible access. We look for the pros. That's not to say that we won't help people that are working to get more experience in the real estate world, but we do like to see prior experience. We want our investors to know that they invest in a project, that there's a reasonable expectation that the professional knows how to pull it off. So one of our biggest criteria is just that you know what you're doing. And we look and we find that the good folks who do know what they're doing have a verifiable long track record in their chosen asset class, in their chosen market. That's our biggest thing. And then we're primarily an asset-based lender as well. And so we look at the the securing asset itself and its value. Most of our borrowers are professionals who are looking to scale from doing a few to doing a lot and are looking for that surety of close, that reliability. They tend to be local experts. They're builders, contractors, developers, and even we get a lot of real estate agents and real estate brokers as well that do have experience with value-add projects. And right now we've been focusing a lot on kind of the rehabs, the fix and flips, and just now we're moving more into the longer-term product as well. We're pretty excited about that.
Definitely. Well, one of the things I had a conversation with, I think, one of your head underwriters, or maybe it was your head underwriter, one of these events, and one of the things I liked is it sounds like you guys are more kind of about common sense when it goes with the underwriting process, and I like the fact that you are focused on the person just as much as the property, because I could tell you as an investor myself, I've seen a lot of on-paper deals that looks like 20% returns that ended up being -10 if they have bad management, or the other way around, a good manager can make. So I love that you guys look at the personal side of it too. So.
Yeah, we're looking for relationships. We're looking for partners. I mean, it doesn't help patch of land, doesn't help me out a whole lot if I do one loan with an individual borrower and I never hear from them again. My job is to make this a good quality experience and to be able to fund their project today, tomorrow, next week, and to fund it in New York and to fund it in Texas, and to be that reliable partner. So we do make sure that we find the quality professionals, and we do our best to make sure we keep them.
No, that's fantastic. Well, and I know you touched on, obviously, at the beginning, I mean, on the other side of things here with the investors, and you say, I'll kind of put this slide up here. I know you mentioned that it has to be accredited investors, but can you talk about kind of the profile there and maybe what the structure's like, too, for investors? I'm kind of curious about the typical term and all that fun stuff, if you don't mind.
Sure. So, as I mentioned earlier, we've got about 8 million accredited households in the United States, and a very, very small market penetration for private real estate investing here. We have a lot of opportunity. Those accredited investors, however, are about as diverse as they come. Their risk appetite spans the entire spectrum. I have very hardworking boomers who spend a lot of time acquiring a good amount of capital. Now they're accredited, and they're very, very conservative with how they invest that money, but they still want the ability to make their own financial decisions, and they like being able to make their own investments like this. On the other side, I've got very, very aggressive accredited investors. I kid you not, I have an ultra net worth investor on our platform who's got $100 million that's basically just sitting in bank accounts. He doesn't trust the markets, thinks that they're gamed. And he's likely correct.
I was going to say.
Yeah. But as long as he can wrap his head around an individual project and he sees value in it, he can fund it. So he can make very quick decisions. And I have everybody in between as well, everybody from dentists to lawyers to financial professionals, to financial advisors. And the boomers that I mentioned, and their appetites and values tend to be very, very wide-ranging. On top of that, too, we are working with traditional institutions as well, where it doesn't make sense for them to try and underwrite and originate individual deals themselves, but to where they can give us a commitment of $50 or $100 or $500 million to fund to invest for them into our property according to certain criteria. And because our borrowers tend to be very diverse, everything from a fix and flip to a 200-unit condo development to we're taking a look at one now where we're converting a library to a single-family residential, a very unique project. We're able to meet their criteria, a very diverse set of criteria from different institutional investors as well. So that's the real power of crowdfunding in this way, is we have such a high level of capital redundancy. Projects that are good projects but might not have gotten funded before because they don't fit that narrow bucket that a bank may look for can find a home online, and it's great.
Well, I know I've got the slide up here for borrowers. I want to talk about that too, but before I get off of this, you guys have a pretty obscenely low minimum amount to invest. Is that right? Did I hear that, or am I wrong about that?
It's fairly low right now, at least as far as when you frame it as far as accredited investors who have net worth in excess of $1 million. We only require $5,000 to be an investor. And so that's really appealing to a lot of our investors, because they could take their $50,000 investment and plug $5,000 in here and $5,000 in there and $5,000 over here, and have a really good level of diversification. So even if one project doesn't turn out the way that they expected it to, overall they're going to see, they have an expectation of seeing a pretty good return. That level of diversification is very, very important. And sometimes, unless you had millions and millions of dollars, it's hard to get that. Now you can online.
No, that's fantastic. Well, and into that, as we can see, maybe talk about, and I know you've touched on it a bit already, but how would the process be if we've got a borrower out there that's listening, as I'm sure we do, because we've got a lot of people in our base that are kind of more the active real estate investor crowd. So if they wanted to work with you guys, how does that work? What's the process like, and maybe what are some of the benefits?
Sure. So, I mean, if you're looking to work with crowdfunding in general, you should have a good idea of what you're looking for first. I mean, are you looking for partners? Are you looking for a JV arrangement where your partners are going to share in the upside, but you're not tied down to a particular debt? Or is it more interesting for you just to pay interest on an interest-only loan like what we offer, and keep all the upside for yourself? That's they're both good ways to go. Different projects require different structures. But that's a fundamental question you should ask yourself. Loans on our side, which is what we deal with, tend to be easier to manage. You don't have to worry about a whole lot of different partners trying to put in their 2 cents, and you get the product of your work and your talent. You get the full upside. So that's where it comes down to the debt versus equity. And then know the portal itself. There are portals out there that'll put just about anything up, but they won't really help you market it, and that can be a big part of it. If you don't know the format of how to present to the crowd, that can be difficult. So you really need to be able to have a platform that's going to be your partner. Most of our projects sell out to the crowd in a matter of hours now at this point. So find a good portal that believes in you and that is looking for a long-term relationship. Find one that is compliant, because again, in the end, this is a security, and you don't want to have to deal with the headache that would come along with being, doing something illegal in any way. And make sure that you've got your documentation. I mean, we've talked before, if you think it's a good idea, there's a million other people that do as well, but you got to be able to show them why. You got to be able to get them to the point where they can wrap their head around it. So get as much information as possible. And I always tell people, you'll get a lot of images. The online investors are a little bit different from your traditional investor. They want to see pictures. They want to see architectural sketches. They want to see videos. They want to feel like they're engaged with your product, with your project. They want to feel like they're there fixing it up and making it nice again. The more visual assets that you can offer, the more engagement you can offer, the more partners you're going to get. And if you're good at it, they will look for you and they will fund you in 2 seconds flat the next time you come up. We have one of our borrowers that literally sells out almost as soon as we put it online, just because everybody's looking for it, because they're so good with it. They're excited. They have fun with it. And then look for your public profile. Again, there is a risk here. You're taking your business and you're taking your ideas and your vision and putting it online for millions of people to see. So go out there, check in your LinkedIn account. Make sure that people can find you online. They don't think you're a ghost somewhere that we're just making up. Really check into how you're appearing to the online crowd.
Well, and I know that what's exciting, and again, to ram it home for everybody in our base that's listening to this right now, when we first started, getting to know you guys, that's one of the first things I looked at. I said, well, what do you guys really need? And I think number one you said was people. You want deals. You guys want to fund deals right now, and I think you've got a lot of money that's ready to be deployed. So anybody that's got a qualified deal, I think it's pretty helpful to know the best format for that. And quite frankly, as the guy that owns the largest real estate group on LinkedIn, I love any time you can combine social media and kind of making stuff pretty with making money in real estate. It's a high five for me. So,
Sure.
so as an investor, then maybe we can walk through that same process.
Yeah, it's very similar, honestly. Though you're looking more into how to evaluate a deal. I always tell people that you need to be able to do your own due diligence. We research things on our side. In fact, we put our own money into every project before we take it out to the crowd. So we put our money where our mouth is, and it also allows us to close really, really quickly without having to wait for the crowd. But you should still be able to do your own due diligence. We put everything online. We put all of our appraisals, our school system reports, construction budget. We'll even put points of interest and walkability scores and crime maps and things up like that as well to help you make your decision. But in the end, the responsibility should be on you to look into it as well. These could be great opportunities, but it is just a matter of time before a project goes bad. And we've done 85 projects now. We haven't lost anything yet, not even any interest. But nobody is ever perfect. And no matter how good we are, we will eventually have one that goes wrong. So obviously, look into each individual project. But similar to the developers, look into what you're looking for. Are you looking for more of a long-term equity project where you're going to share on the outside? Do you want a stable, reliable, predictable debt project where you have a pretty good idea of what you're going to get? Check into your liquidity concerns. Are you able to keep long commitments potentially for a larger payoff, or do you need shorter term, get in, get out type projects? We talked about the ability to diversify earlier, and I cannot stress that enough. That is one of the biggest things you should look for as an investor. Now you have the ability to do so with a relatively small amount of money. You should invest in a lot of different projects. If you believe in a project, invest extra into it, but make sure you're not putting all your eggs in one basket. And then finally, just take a look at the track record. Look into who's running the platform. Look into who's running the platform, so the executive team. Look for their compliance, and look for the ability to talk back to you. If you can't get a hold of somebody, you shouldn't be sending them your money. Simple as that.
If you can't get a hold of them when they want money, then when it's time for them to pay you, how's that going to go? That's a good point.
Oh, right, exactly.
Well, what I love about what you guys have done here in crowdfunding in general, but especially the way you guys structure it and the transparency aspect of it, is that anytime you can take it out of the hands of the big banks and put it in the hands of human beings who can make common sense decisions and have common sense discussions and conversations as things change, because the market's always changing and evolving, right? To me, that's a recipe for success in itself. So maybe we can talk about, so we've covered obviously the angles of crowdfunding, what makes sense for the borrower, what makes sense for the investor. Talk to me a little bit about the different platforms maybe that are out there, including you guys, of course, and what really separates one from another.
Sure. So this is very similar to what we just talked about, but a little bit more of a deeper detail. There are platforms out there. I mentioned that we'll just put just about anything up, and they rely on the wisdom of the crowd to separate out the good stuff from the junk. Versus curated platforms like Patch of Land, where we work very, very hard to make sure no junk goes up. I always recommend going for the curation itself. At the very least, you have that extra level of due diligence on top of it. That's not to say there's some good, that there isn't some good opportunities in what we call the Craigslist platforms, where you just kind of throw everything up and let the crowd decide. But there should be a level of additional security with the curated platforms. You still have experts helping you weed out some of the stuff that shouldn't get funded. But they should have a pretty good description of what their underwriting standards are. And I mentioned before, you should be able to reach out and touch base with the executive team. Get them on the phone. and ask them what their underwriting standards are, what their compliance actually is. I'll put you on the phone with my general counsel, I put you on the phone with my underwriters, I'll put you on the phone with my loan officers, and we'll get you the answers you're looking for. Make sure you're able to do that.
That's unreal to me, to be honest with you. I know, but you know, we work with a lot of people, as I said, and I don't think I've ever really heard that. Where, I mean, you're the CEO, you're the fed, so your counsel's accessible to any potential investor or borrower of the site. Is that what you're saying?
Yeah, no, absolutely. That's our value. Our value is to be that transparent facilitator and providing access. And we have no interest in closeting everything off and being unavailable. We're dealing with people's money here. And we're dealing with borrowers whose careers are dependent upon getting additional funding or may have earnest money on the line. We need to be able to be available and to have good communication with everybody. And that's our absolute top priority on our side.
Well, that's fantastic, guys, especially for anybody here that's investing that really is doing real estate as a career or as a big source of your income or retirement plan. Then obviously that's an aspect. I know, Jason, you know, I asked you right before we got on here today, you know, what your core values were if you had to put it in a sentence, and you told me it really was building that long-term partnership. So that's right. Exciting. How does okay, I got it on the screen. How does the process work, just in layman's terms, from start to finish? This is a pretty neat slide here, but how does that work with a walkthrough?
Sure. So we try and make it as easy as possible. You know, we want to be a one-stop shop. We want to be reliable. We want to be simple. And we want to be fun at the same time. So we source our developers online through webinars like this as well, through meetups, through networking. We've got a really good reputation out there, and we like to make sure to keep them. But developers can go online to patchofland.com and just put in a quick application right there online, and we'll give you a call back usually within the same 24 hours, and we can close usually within about 5 days. But we'll collect all the information right there and start the process off. And once we've underwritten the project and we've closed on it, we'll move to the funding stage, in which case we merchandise it online and put it up for everybody to see. Our investors can choose to invest at a minimum of $5,000, and that adds up very, very quickly. We'll get it funded online, and from there we just move into traditional servicing. So it's just like paying any other loan. We use a third-party servicer that works with Bank of America. They're national. They're very, very good. They're very, very reliable, and they're able to help us invoice and collect on funds, in which we return back at the portion amount to individual investors.
No, that's fantastic. So, I mean, basically, you really have created an infrastructure here where it is kind of as you see on the slide, is the win-win-win-win situation where you've got everybody. By the way, I'm originally from Alabama, so the Winn-Dixie is a pretty popular place down there. Anyway, you've got a situation kind of where everybody wins to some extent.
Yeah, I mean, that's the goal. We don't intend to make things better for some parties and worse for anybody else. We're really just bringing efficiency, you know, and new features to what's been being done for 100 years here. Realistically, the borrower gets access to their capital in a much more expeditious process, much more reliable. You know, they get better rates based upon the local market. They don't have to worry about trying to handhold individual investors. That's our job. They can do what they're good at, which is, you know, making great real estate projects happen. But on top of that, because they're going out online to millions of people, they get their name and their company branded out as a professional. In fact, for most of our developers, their patch of land page shows up first whenever people Google them. You know, patch of land wins because we're able to help people. We're still able to see good revenue. We're able to make points off of a particular project and keep the lights on and keep paychecks going to our employees and still do something that's innovative and hasn't been done before. We're real happy about that. Our investor wins because they're able to get access to real estate investments. And real estate has traditionally been one of the most lucrative investment asset classes out there. And it definitely is now in this booming real estate market. They're able to get access to, you know, fairly short-term opportunities instead of having their funds locked up for years and years and years, and it's all secured by hard assets. And in the end, the communities win. Great projects happen. We don't have abandoned properties that can't get funded because banks can't write a mortgage on something that needs a ton of work. That helps out the neighborhood around it. Doesn't drag down the property value. Doesn't invite crime. So there's a lot of tangible benefits to the community as well, and that works out to a win-win-win-win.
I like it. Well, and guys, don't discount that branding aspect that he mentioned too. I mean, I know for a fact personally that I have gotten hundreds of thousands of dollars worth of deals done that I wouldn't have if it wasn't for my my LinkedIn presence and all that fun stuff. So anytime you can have that aspect and you have a place where people can find you and look at your history as a real estate investor, if you want to make this a career, then that's a huge app. That's just a little freebie add-on. So yeah, Jason, no, that's fantastic. And maybe, I know we're going a little over time here, and we're going to get into the Q&A in a sec here, but in closing, maybe talk about maybe your mission statement for the company if you can, and whatever you'd like to leave our group with.
Sure. So, I mean, you see up on the slide here, it's one of our favorite little proverbs here, which kind of sums up crowdfunding. If you want to go quickly, go alone. If you want to go far, go together. And that's really what crowdfunding is in a nutshell. You can pick up and move fast on your own, but it only takes you so far. If you really want to make great things happen, you need a team, you need partners. And that's really what crowdfunding does, give you a massive, massive set of partners from all over the country or all over the world. And our mission statement, realistically, just to put it into a bullet point, is to have fun, do good, and make money. And we have the ability to do all three of those things with crowdfunding. We can help out our neighborhoods, help out our communities, help out our developers, and really not have to sacrifice in doing so. This isn't charity by any means. This is making an investment into good people, into good projects. And it's fun. And we're happy to be a part of that.
No, that's fantastic. Well, and guys, I have to say, and honestly, I feel like I've learned a lot more personally today, and I'm even more excited than I already was. But crowdfunding, to me, is the cutting edge aspect of real estate investing, and I feel like nobody's doing it better than you guys at Patch of Land. So I really appreciate your time, Jason, to join us here. I know now we're going to get into my favorite part of this whole thing, which is going to be the live Q&A. For those of you that don't know, you can use the chat box there to type any questions that you have for Jason or myself, and feel free to ask anything about crowdfunding specifically, Patch of Land and their model, or just real estate in general. We love to engage with you. And Jason, thanks again so much for taking the time and sharing this information with the base.
Absolutely. I'm really glad to, and I appreciate the opportunity.